If you stay, I'll teach you the best swing trading strategies that work on any market, whether it's Forex, stocks, or crypto. The first strategy involves the monthly pivots, which are the secret weapon of swing trading. They are based on the previous month's high, low, and close, and will give you a rough idea of where the market might find support or resistance in the coming weeks. Monthly pivots are like the big boss of support and resistance levels. They carry a lot more weight than your average daily level. That's because they represent a whole month's worth of price action, not just a snapshot in time. These levels act as a magnet, attracting the price on higher timeframes. The big market players are watching them, and when the price interacts with a monthly pivot, it can trigger some serious fireworks. The more time the price spends above the pivot, the more reliable it becomes as a support level. And the more time the price spends below the pivot, the more reliable it becomes as a resistance level. The strategy here is to look for confluences between the monthly pivot and supply-demand areas. It doesn't happen every day, but when it does, it can be a sign of something special. Let's say you're looking at a chart and you notice that the price is approaching a key demand area that lines up with a monthly pivot. That's a confluence, perfect for a swing trade. If the price bounces off that area, it could be the start of a beautiful uptrend that you can ride for weeks or even months. On the flip side, if you see the price approaching a major supply area that coincides with a monthly pivot, it could be a sign that the buyers are about to run out of steam. If the price gets rejected at that level, it might be time to start hunting for short opportunities. Of course, these confluences between monthly pivots and supply-demand areas aren't the only thing you should be looking for. You'll also want to keep an eye on candlestick patterns, like pin bars and engulfing bars. When you find a candlestick with a long wick rejecting the monthly pivot, that's a really good signal. Now, what if the price blows right through the monthly pivot? It will happen because no level is unbreakable, and sometimes the market will just keep moving with momentum, even on higher timeframes. Even if the price does break through the monthly pivot, it can still give you valuable information about the strength and direction of the trend. For example, if the price breaks above the monthly pivot, it could be a sign that the buyers are in control and that the trend has momentum to continue. The pivot that once acted as resistance now becomes a new support, helping the price to reach new heights. On the other hand, if the price breaks below the monthly pivot and starts to accelerate, it might be time to start looking for short opportunities. The sellers have taken control of the market, and they'll do everything in their power to keep the price from rising back above the pivot. Now the pivot has become a resistance, pushing the price down when it tries to break through. The second swing trading strategy involves using Bollinger Bands indicator. It might look a bit strange at first because you're going to use 3 Bollinger Bands. First, add Bollinger Band with a period of 50 and a standard deviation of 1. Then add the second Bollinger Band with a period of 50 and a standard deviation of 2. The third Bollinger Band will have a period of 50 and a standard deviation of 3. With this setup, the trend is pretty clear to see. Let's consider an uptrend with different stages. When price is between the middle line, the 50 EMA, and the first band, that's a weak uptrend. In this area, there's no strong momentum. Price is likely to bounce around in a range and might even dip below the middle line. You can buy in this area, but only if you have other factors lining up. When price is between the first and second Bollinger Bands, above the 50 EMA, that's a strong uptrend. There's a better chance that price will keep going up. As long as candles keep closing in this buy zone, the odds are in favor of holding current long positions or even opening new ones. When price is between the second and third Bollinger Bands, above the middle line, that's a very strong uptrend. Price is stretched, and I would avoid buying if price goes outside the bands. Looking for overlaps of major support and resistance levels with Bollinger Bands is a great way to find swing trading setups. These confluence areas tend to attract more buyers or sellers, leading to a reversal or a trend continuation. With this confluence, you're basically finding pull